So far, we've talked about the two big pillars of investing, stocks and bonds. They are the core of most portfolios. But the investment world is much bigger than just those two. There are many other types of investments out there. Some are simple and easy to understand. Others are incredibly complex, even for experts. Today, let's take a broad tour of this bigger universe. We'll keep it clear and focused on what a beginner should know. First, it helps to split all investments into two main categories. The first is traditional investments. This is the category that holds stocks, bonds, and one other important group, cash equivalents. You might not think of cash as an investment, but in finance, it refers to places where you park money that is safe, stable, and easy to access. Think of it as the foundation layer of your financial plan. The most common cash equivalent is a simple savings account at your bank. It pays you a small amount of interest, and you can take your money out anytime. In the United States, these accounts are protected by the FDIC, which adds a strong layer of security. Another common one is a certificate of deposit, or CD. With a CD, you agree to lock up your money for a set period, like 6 months or a year, in exchange for a slightly higher interest rate. There's also a whole group of short-term loans called money market instruments. These are like ultra-short-term bonds that mature in less than a year. Companies and governments use them to borrow money for very short needs. For an investor, they are very low risk and very liquid, meaning you can turn them into cash quickly. The trade-off, as you might guess, is that they offer very low returns. The key thing to remember about cash equivalents is their role. They are for safety and short-term needs, not for growth. Their returns are often so low that they might not even keep up with inflation, which is the rate at which prices rise. But they play a crucial role. They are a safe harbor for your emergency fund, or for money you'll need in the next couple of years. Now, let's move to the second major category, alternative investments. This is a very broad term. Basically, it means everything that isn't a stock, a bond, or a cash equivalent. It's a huge and varied world. We won't cover every single type, but we'll go over some of the major ones you're likely to hear about. A major alternative investment is real estate. This doesn't just mean buying a house to live in, it means purchasing property as an asset that can make you money. There are two main ways to profit from real estate. First, the property itself can increase in value over time. This is called appreciation. Second, you can earn rental income from tenants. It's a tangible asset, something you can see and touch. But buying an entire building is expensive and comes with big risks, like a bad tenant or a leaking roof. So how can a regular investor get into real estate? One popular way is through a REIT, which stands for Real Estate Investment Trust. A REIT is a company that owns and operates a portfolio of properties, like apartment buildings or shopping malls. You can buy shares of a REIT just like a stock. It lets you invest in real estate without having to be a landlord. Another big category of alternatives is commodities. These are the basic raw materials of the global economy: oil, natural gas, wheat, corn, copper, and gold, to name a few. Investors buy commodities believing their price will go up in the future, often due to supply issues or rising demand. Some, like gold, are also seen by many as a safe haven during uncertain economic times. You probably don't want to buy barrels of oil or bars of gold and store them in your garage, so how do people invest? Often, they use specialized funds or a complex type of security called a derivative. This brings us to one of the most sophisticated areas of investing. Derivatives are financial contracts that derive their value from the price of something else, like a stock, a bond, a commodity, or even an interest rate. Common types are options and futures. In simple terms, when you buy a derivative, you're making a bet on which way the price of that underlying asset will move. They are powerful tools used for two main reasons: speculation, trying to profit from price moves, and hedging, trying to reduce risk. For example, an airline company might use derivatives to lock in a future price for jet fuel, protecting itself if oil prices skyrocket. That's hedging. An investor might use an option to bet that a stock will go up without actually buying the stock. That's speculation. Derivatives are very complex and carry significant risk. They are not where a beginner should start, but it's good to know they exist. The world of alternatives is vast. It also includes things like private equity, investing in companies that aren't publicly traded, and venture capital, investing in startup companies. These are typically for very wealthy individuals or large institutions, as they require a lot of money and carry very high risk. After hearing about all this, stocks, bonds, cash, real estate, commodities, derivatives, it might feel overwhelming. How are you supposed to choose and buy all these different things? The good news is you don't have to be an expert in each one. For most beginners, the best path is to start with simple, diversified funds that do the selecting for you. In our next videos, we'll talk about those exact solutions: mutual funds and ETFs. These are managed solutions where professionals pool money from many investors to buy a broad mix of these assets. They are the tools that make building a diversified portfolio simple, affordable, and accessible to everyone. For now, just remember this landscape. You have your core traditional investments for growth and income, you have cash for stability, and there's a wide world of alternatives that professional investors use for specific goals. Your journey starts with the core. As you learn more, this bigger picture will help you understand what you're hearing about in the financial news. Thank you for exploring this with me on Invest Easy 101. If this overview helped map out the investment universe for you, please consider subscribing. We're here to take complex topics and make them clear for your first steps. Let us know in the comments what you'd like to understand next.